So this is obviously another big one for folks that are earlier on in their career and you've got some student loan debt. You know, we put on here a reference to SoFi.com. Another one that really is a very good option that I would take a look at, maybe even as a starting point, is Credible.com, because there have popped up in the last 3-4 years now several different private lenders and organizations like SoFi that are here to assist you in making sure you've got the most viable interest rate and loans that fit your situation and what you're trying to accomplish in your life. So again, that would be probably a great starting point. You know, just to give you some benchmarks here, I'd say if you have an interest rate on one of your loans or all of your loans that is north of 6%, I would absolutely take a look at what else is out there. And I think Credible.com is a great starting place for that. And then from there, they'll point you to some other options maybe that you can more effectively reduce your loan, your interest rate, and your payment structure on those loans. Again, this is something maybe even to think about too. If you've got kids and you're getting closer and closer to those kids starting to go to school, you know, obviously the loan system has continued to grow and to climb in terms of what amounts. I mean, the graduating class from 2015 now is the most indebted class of all time. They've got, on average, they've got $35,000 in student loan debt, which is obviously a big number. Some people might be thinking $35,000. I would gladly take that compared to what I have. But again, this is a number that has doubled over the last 10 years in terms of how much people are borrowing to go to school. If you've got kids that are coming up, I mean, first of all, I would really make sure that you're encouraging them and also building into your budget to be saving for them so that maybe they and or you don't have to take as much in loans out there. But I think, you know, the other thing that we've got to really start to consider more and more at this point is, you know, what are the alternative options to just go on the normal path here and, you know, sending our kid to a school that costs 40 or 50 grand a year and they're going to come out with a mountain of debt on the back end. You know, can we explore some of these other options of junior college and transfer in to a, you know, a state university or even just a state versus a private university and the cost savings there. A lot of, you know, new online schools that are popping up that really offer some value to folks. So again, I would really encourage your kids, if you've got kids that are up and coming or getting close, that, you know, it's okay to not necessarily go to the reach school if we get into the reach school. Maybe we can, you know, we can go down one or two schools on the pecking order that we got into because they're going to give us some money and they're going to make this a little bit more financially easier to swallow over time.